Hello, doctor. My name is Timothy Fueling, and I'm the Senior Vice President of the CBS Malpractice Program, a chiropractic malpractice program dedicated and committed to chiropractors in all 50 states as far as protecting you and your assets in a case of malpractice, sexual misconduct, or board issues that could occur. I wanted to come to you today and introduce you to the two different types of policies that you have as options to purchase when you buy malpractice insurance. There appears to be a lot of confusion between the policies and a lack of understanding in the profession as a whole. So one policy type is called Occurrence, and the other policy type is called Claims Made. Now, there are a few companies out there that really hard-press chiropractors in the schools to purchase the Occurrence type policy. Now, keep in mind that insurance companies make a higher premium on those Occurrence type policies. The Claims Made type policy is actually the less expensive policy to carry throughout your career. And in fact, most medical doctors, nurses, dentists, lawyers, and even myself as an insurance broker carry a Claims Made policy. So what's the difference between the two policies? Well, first of all, an Occurrence policy is a policy that is covering you for the dates that the care occurred. Okay, so in other words, if you're insured from January 2000 to January 2010 on an Occurrence policy, and you cared for a patient during that time period, and that patient comes to sue you anytime in the future, it could be 2015, then as long as the care occurred between that window of 2000 to 2010, you're covered under that Occurrence policy because that's when the care occurred. All right? Now, if the care occurred in February of 2010 and you no longer have that policy anymore, then obviously that claim is not covered because you didn't have the Occurrence policy intact at the time the care occurred. Now, an Occurrence policy also covers you for the limits of liability that you had at the time the care occurred. To me, that's one of the weaknesses of the policy, but it's an opportunity for you to have this type of policy if something that you believe in and that you feel is the best policy for you. So what it means is you're covered for the limit of liability you had at the time the care occurred. So same scenario, you're covered on an Occurrence policy from January 2000 to January 2010, and in January 2002 you see Mrs. Jones, okay, and you have a $100,000 policy limit at that point in time. Okay, and then 3 years later, Mrs. Jones decides to sue you for that date of care 3 years ago. Well, 3 years later, you're actually carrying a $1 million policy limit. You've moved your limits up over the last 3 years. You're still only covered for the $100,000 policy limit. That's what you had at the time the care occurred, okay? And not what you had at the time the claim was actually made. So with that being said, I'm going to parlay over right now into the Claims Made policy and how that policy works. A Claims Made policy will cover you for the dates that the claim was made, okay? In other words, same scenario. You're covered from January 2000 to January 2010 on a Claims Made policy, and someone comes back and sues you for any of those dates, as long as the claim is made at the time that you've got the policy in force, okay? Then you're covered for that claim by that particular company. Now, you're also covered for the limit of liability that you have at the time the claim is made versus back when the care occurred. So that same earlier situation where you're covered from 2000 to 2010, this time on a Claims Made policy, and in 2000 you have a $100,000 policy limit, but 2003 you've raised it up to $1 million, and Mrs. Jones sues you in 2003 for that incident back in 2000. Well, now the company is liable for a $1 million policy limit because that's the limits you had at the time the claim was made. So in a Claims Made type policy, every time you increase your limits of liability, the company becomes responsible for covering you for that limit of liability for your past claims that could occur from the previous years. Now, Claims Made, what's kind of nice about it is you can be with 22 different companies throughout your career. And as long as you always have a policy intact with one company or another on a Claims Made basis, you're always going to be covered by the company that you have at the time the claim is made. Okay, so you could start off with company ABC and then go to DEF and then go to GHI. And as long as you always carry your prior acts with you from company to company, then whoever you have at the time the claim is made, even if it's for a 20-year-old claim, that's the company liable for the claim that you have. Okay, so every company I know of in the chiropractic malpractice marketplace offers free prior acts coverage, okay? Prior acts means acts that could have occurred previously. So what that means is if you're insured by company ABC from 2000 to 2003, and then you switch to company DEF in 2003, and then in 2005 a claim comes in for back in 2000, company DEF is responsible for you because they picked up your prior acts coverage for you from company ABC. Company ABC no longer has any liability for you. All right? So the claims made policy, folks, is a policy choice where you save premium dollars throughout your career, and then you have the opportunity in the end to purchase a tail coverage should you decide to do so, which I highly recommend, so that in the end you have policy coverage from all the years that you've been insured under the claims made policies by the company that you retire with. Now the great news is most every company I know of in the chiropractic malpractice marketplace, including our company, CBS, gives what's called free tail coverage when you retire. So with our company, if you're 52 years of age or older when you retire, you automatically get a free tail for the rest of your life as long as you've been insured by our underwriter for 1 or more years. Some of the other companies out there do 55 years of age, 65 years of age. Some of them require 5 years of service with them, 10 years of service with them. But every company has a free tail policy. And this type of policy gives you the opportunity to retire with the most financially stable and strong company possible in the end, okay? And it allows you to control your past years of coverage by always bringing them with you to the new company that you decide is the best company for you. So Occurrence has its advantages. If you don't know how long you're going to practice and you may only practice for 3, 5, 7 years, then Occurrence may be a better choice for you because even though you overpay for the policy premium because you're buying the tail ahead of time, it may be a win-win as far as the cost of the policies for those amount of years for the number of years you practiced. But if you're the average chiropractor coming out and you have no plans on retiring in 3, 5, 7 years after being licensed, after spending $150,000 becoming a chiropractor, then you may want to take a stronger look at the claims made policy. So again, it just depends on what type of policy resonates the most with you, which one you feel the most confident in. Both are good policies. They both have their strengths and weaknesses. With that being said, my name is Timothy Fueling, Senior Vice President of the CBS Malpractice Program, and I hope this video has helped you better understand claims made versus occurrence. Thanks for your time today.